Hey gang, what's going on? Been a while. DJ from PTA here. I'm gonna go over the month of November for you today. Wasn't a lot of trading being done in the month of November. I really didn't do any trading in the month, so that's why I'm just gonna do a monthly recap of a few stocks that month, just to kind of give you an idea of how you should have played those couple of trades. As far as me getting the update, I pretty much took the month of November and December off. It's very typical for me to slow down my trading into the third quarter, simply because there's just not a lot of plays, a lot of favorable plays that play up. Also, it's usually the time when we start bringing in our new recruits and the newer guys that's coming in and learning how to trade. So with the trading and hands-on with them, it kind of takes me off the desk. But I've been requested to kind of do some video recaps and to continue. Things should slow down for me here in the next couple of weeks, moving forward in the month of January 2023. So I will be able to kind of spend some more time on the YouTube channel, put more videos out, and actually do some bit of trading. So one of the trades I want to go over with HUDI. This was on November 4th. This was a runner, and especially with the month coming out of the slump in October. It was pretty slow. November started off kind of slow, but this was one that popped up on the radar. Gave some good momentum the first day as well as the second day. The second day was the key day to make the play, simply because of the reversal. So let me kind of break that down for you, and pinpoint your areas. Remember, there was really no areas of confluence when it comes to this stock, simply because we didn't have any real price action. You had a nice little spike back in October, but then you had a nice pullback. You had previous week high, previous month high placed there. So as we break down the chart, let's go down to the 30-minute. This is the first day that it ran, which was the 3rd. We had a quick pop pull, and it popped up after hours and then slammed. That got shorts very interested in the stock coming out the gate. So mind you, coming into the day after a big run up and you got a slight pullback. We had some massive amount of volume that came in as soon as we came out of the gate, pulled it back down, and then we just got a nice rip. So the entry on this should have been around, I want to say, about 67. So let me break that down into the 5-minute. So after we had this nice pullback off this $100 area, we pulled under, went under here. Like I said, the answer was about right here, about 67, which was right around that 68 area, pushing out previous month's high. Once we got that pushed, now if we pull this down to the 1-minute, you can really see the position there, because we did have a little bit of skip in volume. So we did have to wait for volume to pick up, but by this time volume had picked up in such a way that gave us the area right there. So once it got over this descending candle, descending pattern or whatnot, it pushed, pulled back, and then literally carried on. I think we ended up getting out of exits. From what I've seen, a few guys told me they got out in the 80s. So the 80s was somewhere around here. So guys really slammed it right into the 200 EMA, and it continued on. But again, with the pricey, sketchy price action and everything, you wanted to take what you can. Just one of those type of trades where you just take a little small piece on it. For some of those people I talked to that did this trade, actually was adding into this push and the push out. So for the most part, this turned out to be a decent trade. 67 to 80, not too bad with the percentages on that. That ended up turning out to be a very, very, very good trade. So the next trade I'm going to go over with in the month of November was one that I felt was probably one of the better trades for the month. And I say that based off a pattern, and that was XELA. So XELA was a penny stock. So that was on November 11th, I believe. So let me go back here. So I'm waiting for the chart to come up. Now this on-demand feature has its little bugs and different things like that, but it is a great tool that Thinkorswim has that does allow you to be able to place trades, mimic trades, different things like that. We use this extensively in training to give people an idea, gives you a playback, not as accurate as real time, so we do screen records, but if I'm trading and I'm trying to show someone something from a pictorial aspect, it gives you a good outlook on how that could be a good trade. So we're coming out of somewhat decent pre-market volume of about 311,000 on this trade. So coming out the day well under the 200-day moving average, but we had us a nice little spike. So right over 22 was pretty much pushing out all these shorts that were placed in here, as well as this red day. And then as we started to push up, remember guys, when I'm drawing my lines, I'm looking for that area where it pushed down. So that was right here at 25. So that was a key area. We had us a big push off of this area here. And you see the bouncing support right there, had a retest and break, a push away. And then if you look here, it pretty much just hit the top of that candle there at 30 cents, right in that area. So it was 30 cent, 37, and you probably would have looked at 49.50 as the next key areas. But as a result, you always take a look back. So as I look back at this, I'm looking at this as a key area, which was a good push, as well as this was a key area as well. So as you zoom in into the time frame, it starts to give you a different picture. So remember that these are our pinpoints from the higher time frames. So breaking it down, let's go down to a 30-minute. Remember, we had about 300,000 in volume, so that's what put it on the radar. Really no price action. You can see that it rejected the 19s. As it pushes through the 19, it comes back up and retests the 23. As you see, it took it out there, had an indecision there, and then we had a little bit of volume step in right here. So this was the key area there. So let's go back over here and look at this chart on a smaller time frame to pinpoint our area. Remember guys, you're always looking for key areas when you're trading. I always look at my angles. So right here was the key area to get in. So you're risking about a cent. Yeah, you're risking about 1 cent to get in this. So you load in right here, right at 23. We had a little bit of sideways price action, but we see this buying pressure with the candles here. You could have added here if you wanted. Some traders actually waited for this push, pushed in there, and then obviously you see right over the 25 is where things got really good, and we just had a nice little push up to 30. Now, as I tell you guys about support and resistance, a lot of people use different indicators. A lot of people use just candle reading. We have software that kind of reads the candles for us. We're going to be presenting that over the next couple of months to interested people who looking to do algo trading. But for the most part, you can take a look at this trade and see where the momentum shift. As you can see here, as it went sideways, it couldn't bring it back down under 23. Remember, 23 is a whole number, as well as it's a support or previous resistance turned new support into the new time frame on a smaller time frame. So you always want to draw your support and resistance off the top areas. These are the critical areas. This is what the banks are looking at. This is what the good traders are looking at. We're looking at the big time frames to look at our support and resistance. So we had some support here, 23, got us a nice push off to the 30. And as you can see, as soon as it hit 30 cent, it pushed away. Why? Because that was a major resistance off the daily. And we're talking about something that it hadn't touched in a few days. So if we go back and look at that area, I mean, it hadn't touched it since the 8th. So we use that area as a push. So anything above that area should be a nice significant or whatnot squeeze. So this was a really good play because the one thing about penny stocks is it doesn't take a lot of risk to get in a good move. So remember, we had a 1 cent risk with a 6 or 7 cent gain, depending on how you played it. But those type of trades are phenomenal because you can load up 1 cent risk. Let's say you risk 100,000 shares or something like that. Now you're in a position where, okay, I only have this much of a risk, $10,000, but you got the potential of making 60, 70,000. So depending on your account size, depending on your tolerance and understanding of the chart pattern, these are the things that will make you interested in getting those type of positions where you can get into them safe, feel comfortable, knowing that you have some support, and then let it ride out. And this was just pretty much double confirmation. We had a nice push here, and then you had a push past 23 with a respect there. Anywhere at 24, 23, if you just wanted to be safe, you do 25 and still got you a nice move up. So something to think about when you're looking at trades. So that was on XELA. Now again, guys, I'm not going to go over the full month, but I'm picking out trades particularly that I looked at that I really thought was really good trades. And that was November 11th on that trade. So for the most part, I have one other trade I want to go over. Let me see here. And this one was BILI. This trade was on November 15th. So let's go to November 15th. So November 15th was our trade on BILI. BILI, if you've been following us for a while, or if you're just a trader out there, you pretty much know about this particular trade. BILI is a former runner. So this is one of those things where when you see something you've seen before, you get kind of excited about it because you know it's the potential. We had a massive gap up into previous month high. So everybody pretty much under here is underwater. So once it respected and tested that support and came back, because remember it was resistance here, it popped over resistance and came back and tested it. So let's go over here and break it down on a 30-minute. So as you can see, when it popped up over it, came back, retested, and gained some strength. Why? Because now everyone that's up under that price has to get pushed out. So we had another retest. This was probably a short retest right here at 1544. I'm going to look at this and put it as purple because that's entry day. Let's break this down to a 5-minute so I can really show you where the entries were. So when you look at this trade, you can actually see it right there. That 1544 is where it played as resistance. They pulled back, and then what was interesting is they used this as a support, kind of a wedge that goes straight into that right there. So now when you go down to the 1 minute, now granted we almost had 1 million in volume, so this is the reason why this was set. You always want to let the stock breathe. What I mean by that is you want to let the stock get up there to an area and then pull away. So you got to know where the resistance is to know where your key areas are. It pulled in, pulled back. Your entry would have been somewhere around the 15s. 1525, 1530 was ideal. Look like I'm looking at one of the traders here on our floor got in at 1537. So 1537 was right around here. So again, not knowing the area by just physically looking at the chart, and over time you'll get better and better at this. But one of the things you want to be able to do is be able to look at a chart and know where a potential key area can be. Well, why would that be key? Well, we're coming into a resistance with some power behind it. Look at the pattern. So it's making higher lows, stepping into the stock. So right there is probably key area. Off the wedge, you look at confluence, multiple things happening at the same time. That's the key to trading. You want to find multiple things that's happening, because then if you see it, then there's other traders that see it like that as well, and you want to go with the flow of the market. So as that went up, we got us about 1670 exit is what he said he got out. 1670 was way up here. So phenomenal trade. Let's look at that. 1670. So let's go here. 1670 exit. So we see that it popped up, pulled back, popped up, pulled back, popped up, tried to use it as support, got the 1688, and then broke down. So that was a great exit actually, because he allowed that stock to breathe. Let me give you another secret that we tell our traders when it comes to this. Now, this is something for those who do watch these videos to get a little bit of more information from us when it comes to this, to trading. As you can see, it bounced off this trend line. As it broke, it came back and retest. When it created this edge here, then you know to get out there. So when you're looking at a trade and you're trying to place a trade in such a way, you have to have your areas. And as you can see, that is exactly what most people were looking at when it came to this particular trade. Everybody started to get out here or took a short at this position to let it ride. And just from there, if you look at the math, from there to there, that was about a 4% move. Now, from the exit position, from the entry position to your exit, that was about a 8% move. So as I tell guys, you got to know where you're headed. You got to know where you're going, got to know your percentages and where you're at, so you can actually get in and out. So whenever you place in a trade, first up, make sure you have a entry point. Second, already have a defined exit point. So other than that, if you don't have those things in play, this shouldn't be a trade. So guys, those are pretty much the recap on those stocks for the month of November. If you have any questions, concerns, leave it in the comment section. Hit that like button. Make sure you hit that subscribe button so you don't miss any of our videos. And as I tell all old traders and new, stay studying and stay focused.